Okay, guys, a very common question we get is, how do I start in this community? How do I start looking for my investment ideas? Well, there are so many ways. Guys, there's 10,000 freaking stocks out there that you can look at, maybe even more. I don't know the exact number, but it's a huge number of options out there for what to look for. So, one of the first things, an idea, Mo, would be big falls. Yeah. Look for companies that are selling at 52-week lows or falling big time from their highs. Like a company today that you might want to look at.
Yep.
You know what I'm going to say, don't you?
PayPal.
PayPizzle. It's down 11% today, and its all-time high was $310, and it's currently at $67, almost at its 52-week low. Almost at its 52-week low. That, to me, now, again, just because a stock has fallen 80% does not mean it's a good buy. Price is what you pay. Value is what you get, right? If I told you right now that my house, I want to sell you my house for $10 million, and then you don't buy it, okay, fine, how about $5 million? You hear 50% off, that's a good deal. Well, what if the house is only worth $1 million? All the comps say it's worth $1 million. That is what you are doing when you buy a stock purely because it falls in price. But don't ignore the fact that it has fallen. You should take a look at it, right, Mo?
Yeah, absolutely.
So what stocks have you looked at, Mo? And you know, that's one way in which I screen. I just look every day at the top gainers and losers, and I kind of get an idea, and I'm like, okay, that's kind of interesting. That's kind of where I go. Yeah. What do you do?
So what I like to do, honestly, I come over here to the tools section. So this is on our software. $7 for 7 days right now. You can try it out. It has all these tools, but 8-pillar search. And I just go and filter out different companies. So we have our 8 pillars that you can go through here. 5-year return on capital, shares outstanding. We want to see if they're increasing or decreasing. 5-year price to free cash flow. So I'm just going to go PE and high ROIC and go. And it pulls out all of these different companies that I could just start scrolling through and looking at. If you want to go even further with this, tools, pillar screener. You can customize your own pillars here. So if you don't like our metric of less than 22.5, you can come in here, go to your 5-year PE and do less than 15. Or if you wanted to, see here, I'll just search anything less than 15. That pulled out 1,088 companies.
Oh, wow.
Yeah. So if you want to screen even further from there, let's go through. Let's stick with our EM8 pillars. And let's do 5-year ROIC, but we want greater than 15%. So instead of our 9% number. There you go. That brought that down to 93. So this is just different ways that you can go about this. And you can do up to 12 here. Quadrillions, 4 quadrillion different
variations
or whatever.
Yeah.
So that's how I like to do it. I like to start with very simple things and narrow it down from there.
So that's really good. So my goals in investing have changed drastically since we started this channel. You know, before I wanted to be this investor who found specific situations. Hey, company X is selling for 20. I think it's worth 50. I'm going to own it. When it hits 50, I'm going to sell it. Now I've changed to, you know, I've got a lot of businesses going on. I got a lot of, I don't want to pay the taxes. I'm going to find companies that I want to own for a very long period of time. So on my phone, I have a list of companies I want to own forever. But guess what I do? I put them on my watch list. This watch list in our software, I have 56 companies on there right now. Not all of these I want to own forever, but there's a lot of companies here, and I put them on my watch list, and I run my analysis and pick a price that I want to put it as to notify me. And when it does hit that price, I will get a message telling me, hey, Paul, I'll get an email, I'll get a message on here, and I will get a notification on the desktop to tell me stock hit your price. I like to find companies that exist everywhere. Like I'll be driving down the street. You know, I've been having a lot of conversations about Ferrari. You know, we were in Naples, Florida, and we passed a beautiful Ferrari dealership. And I look at Ferrari as the brand. I say, man, talk about a great brand.
Buffett actually spoke about them.
So what did he say?
He was basically talking about how the car company is doing its shift and all different things. And he's like, and then there's Ferrari. He's like, it's just a very interesting brand. He's like, they only sell like 11,000 cars a year. And they just...
Did he say 11?
Yeah.
It's actually 13 last year. But that's the thing. Here's a car company that has 50% gross margin, has 20% bottom line margin, which both those numbers are insanely high for the car industry. They only sold 13,155 cars last year. And my guess is that the world gets wealthier and wealthier.
Yeah.
But my price for Ferrari is a lot lower than here.
Correct.
If you want to look right here so we can filter, Ferrari's is race. I have it on my watch list at under 150 bucks. Yeah. So once it goes under, it's got to fall in half. Sounds like a lot. But here's the great news, guys. If I do this, I have 56 companies on my watch list. As the market goes down further and further, I'm going to get notifications every single week on stocks that are hitting. Yep. You know, I have PayPal on my watch list at 65 bucks. It's currently at $67. I'm selling puts at much lower prices. That's the key here. The key is go out there, figure out what works for you. If you're the kind of person who wants to buy individual small companies that have a lot of upside potential, more power to you. You can still do the things that Mo and I are talking about. If you're like me and you want to be lazier about investing and just hold great companies for a long period of time until the story drastically changes, do what I do. Go out there. Look at the things you use every day, but don't buy the companies just because you love the companies.
Yeah.
Buy them because the price is right. That's why you use our stock analyzer tool to then determine the price to pay for the company. Go ahead, Mo.
Something else I like doing, and value investing and investing in companies with this mentality is a very lonely road, using the community. We have a community right up here, thousands and thousands of people, and you can see all the different discussions they have. Go and get ideas there. Before I had Paul, you just like kind of Google stuff and you have nobody to talk to. This gives you an opportunity to talk to people. And that is, I'm not even trying to sales pitch this right now. It is so important to be able to talk to like-minded people when you're investing because it's a very lonely road out there.
Yeah. And that's the thing that's like, investing in general, in order to be successful, you have to be a very independent thinker.
Yep.
You have to be able to sit there and say, okay, so let me pull up Ferrari, since we're talking about Ferrari, because I want to actually talk about my analysis of Ferrari, because to me, it's very important. Here's a car company. And like I said, very little debt, 49 billion to 53 billion in market cap to enterprise value. But look at this margin, 48% gross margin, which is actually low for their history, and a bottom line margin of 18 and 19%.
It's insane for the car industry.
Return on invested capital, 15.8.
Also insane for the car industry.
Exactly. So what does this mean? This means that Ferrari is a very, very, here's the deal. So in full disclosure, we went into the dealership, I saw a car. And of course my fiance says, well, what about ordering a new car? And I kind of chuckled. And I was like, oh, you're adorable. And the salesman there was kind of smiling. He goes, listen, here's how it works. Do you have a Ferrari now? I said, no, we do not. He goes, okay, here's the idea. You buy a used one. And the second you buy the used one, you're in the system. Then you're allowed then to basically put an order. You can put an order in anytime you want, even if you don't own one. But you're going to be given priority. You're already part of the Ferrari family. Talk about exclusivity.
Yeah.
And I look at that going, okay, am I willing to pay a premium for a company that has that kind of exclusivity? It's not like the iPhone. How many iPhones are sold every year?
That's a great question. Let me look.
13,000 Ferraris are sold a year, and the average price is $300,000 to $320,000. And guess what? They're sold at full ask price. And you know what the guy said to me? He goes, you know what I do? I have clients who come in, order a $600,000 Ferrari. They order a new one, the second that comes in. And then when the new one comes in, they trade in the $600,000 ones. We give them a check for $850 because we're going to sell it for $1 million, and they get their new one. And they use it as a way to make money. And I'm like, well, I'm not really interested in that, but I thought it was interesting. How many iPhones?
Call it an average of 200 million.
200 million.
Yeah.
There's 13,000 Ferraris sold per year.
And this is in the United States.
In the United States.
Yeah. For iPhones.
200 million a year?
Yeah.
I'm going to say no to that
191, 206, 240 million in 2021, and then 153 million in 2022.
Really? You're telling me that we have 330 million people and 2 in every 3 people gets a new phone every year? I don't know. Anyhow, so the reason I bring up this Ferrari stuff is because I'm going to sit here and I'm going to look at Stock Analyzer and sit there and say, okay, I'm going to look at Ferrari for a 20-year period. I can do 1 to 10. And we have our ROIC here. The high ROIC means they get a high return on the money invested in the business, and it could show you a moat of sorts. Let me ask you a question. Ferrari is currently worth $50 billion in market cap. If I gave you $50 billion today, I think this is something I've started to say a lot. I think it'd be hard to replace Ferrari.
Yep.
You couldn't create a Ferrari tomorrow for $50 billion.
Nope.
That's going to be very, very difficult.
You're not going to be able to create that brand.
Because you have this lifelong brand of quality, excellence, and exclusivity. That doesn't happen with just writing a check. Mm-hmm. And that's the thing that's hard to overcome with Ferrari. So, look at revenue growth. Now, here's the great thing. We show the 10, 5, and 1-year revenue growth numbers. Listen, Ferrari's growing. Africa, fast market growing for them. They don't sell a lot of cars in Africa, but it's growing 30, 40%. Asia, India. As these countries worldwide become more and more economically wealthy, there's going to be more and more demand for these high-end products. So the question is, if Ferrari can increase its base price by 4 or 5% a year and increase their output by 4 or 5% a year, you're looking at 8 to 10% growth overall in revenue, right? I look at that saying, okay, so I'm going to be conservative. I'm going to go low side 5%, middle 8%, high side 11%. Okay, actually, you know what? I'm going to do 4, 8, and 12. Okay, next is profit margin.
It's a decade or 20 years?
20 years.
Okay.
Next is profit margin. In the last 10 years, they've averaged 16%. Last 5 years, 19.4, and last year, 18.5. I tend to err on the side of 10 and 5 years. But in the last 10 years, their business model has really changed. In the first few years of the last 10 years, you could go to a dealership and get a Ferrari. Now, I really love this exclusivity. So I'm going to sit there and say, let's say it goes 15, let's say it goes 16, 18, and 20%. Okay, so let's say they're able to drive up some more margins here. Let's say they stay the same, and let's say they do a little bit worse. Okay, fine. Free cash flow margin. Now, this is the part of Ferrari I don't like. Why is the free cash flow so different than the profit margin? Mm-hmm. And that's why I'm glad I don't want to buy the company yet, because before I buy the company, I got to figure this out. The free cash flow is almost half of the profit margin. If it was flipped, I'd feel a lot better. Like PayPal. Yeah. PayPal has a much higher free cash flow than profit margin. Right. Because it's easier to manipulate this than this.
You said something important there.
Yeah.
You want to buy this for basically when it falls in half, but you haven't dug into that yet. You're not spending the time to go do that yet until this gets closer to the 150 mark. Why go in deep dive when it's not even on the radar yet?
All you're doing when you deep dive before, you're justifying paying a higher price for it.
Yep.
Take that bias out of your way. That's another thing we do. We don't do deep dives unless it's close to our price, because I don't want the bias. I don't want to have that bias of like, oh man, I spent all this time on this company and I'm only going to look for things that make me want to buy the company. Why? Because you want to buy companies.
Right. So maybe when this gets to 200, 190, then you go and figure out the free cash flow. So for free cash flow margin, I'm going to do 10, 11, and 12%. PE. Now guys, the PE currently on Ferrari is 50. And the price of free cash flow is 88. All right. I'm willing to pay a premium for Ferrari. The question is how much of a premium? This might shock you. 20, 24, and 28. Whoa. I thought you were going to go 18, 20, and 22.
I think to myself, for this brand, and this is motivated by Warren Buffett buying Coke for 30 PE back in 1987. A company like Ferrari ain't going away. Mm-hmm. If the world economy collapsed, they're still selling cars.
All 13,000 cars.
Yes.
Yeah.
Because there's still a wait list for those cars.
Right.
If you order a new Ferrari today, if you're lucky enough to be able to be on that list, you're going to wait 16 to 20 months to get that car. So this brand is probably going to hold it, just like Louis Vuitton. If you look at Louis Vuitton's numbers, when the world has recessions, they still grow. Why? Because rich people still want to buy nice things, and they're not as affected by recessions. Right. To me, that justifies this really high PE. Now, the hard part is their price of free cash flow is 88, so you're going to see a very low number for the value in free cash flow. Now, the question is desired return. I'm going to go 10, 11.5, and 13.
Okay.
So I look at this saying, okay, 10, I'm okay making 10% if they do a crappy job. Imagine me buying the stock for so cheap that they can do a crappy job and I still make 10%. And as my assumptions go higher, I need to increase my margin of safety. And you increase your margin of safety by increasing your desired return. Because the more return you want to make, the lower the price has to be. If something's worth $1,000, you're going to make more money if you buy it for 100 than if you buy it for 800, right? So the higher return equals a lower price. Now, I hit the analyze button, and let's see what happens. All right, I'm going to focus on the multiple of earnings. 93 to 268, middle price of 150. All right. Now, look what it had to take to get to 268. I had to do 11% revenue growth, 28 times earnings, record profit margin, record free cash flow.
Yeah.
I don't like that. No. So I have it on my watch list at 150. Now, at that point, I really got to understand why the free cash flow and the earnings are so different. Right? So these are the things we do, guys, in order to, and by the way, how you add it to your watch list is hit the check mark, hit the plus mark, and it'll ask you what price above or below, and it'll add it right there, and you're automatically going to be emailed or notified on your app when it happens. So guys, this is how we use our tools here. We created these tools for Mo and I, and then when people started to request it, we're like, okay, people are going to be able to use it. So again, $7, 7 days, check it out. It's a no-brainer. It's $1 a day. I can't imagine anything. And we haven't even looked at all the other tools that are coming with it and the community.
And what we did, if this is your first time seeing it and it sounds complicated, it's really not. It's just repetition. There's really no genius to what we just did.
Correct.
Just a little screening process.
Yep, that's it. It's just, you have to do it over and over, and you'll get it very quickly. If you do it 20 times, I guarantee you'll get it. So thanks very much, guys. This is part of our process. Continue subscribing to the channel so you can see more about it. Thanks.